I'm Danielle Hale, Chief Economist for Realtor.com, and here's what you need to know as we head into June. First, the blockbuster monthly jobs report is out. It showed that the economy continued to add jobs in May. Leisure and hospitality, professional and business services, and transportation and warehousing industries saw the biggest growth over the last month. Meanwhile, the unemployment rate was flat and paychecks grew. This report follows a more detailed picture of April hiring that showed more than 11 million job openings, much more than the number of unemployed, while the number and rate of job quitting is down slightly from recent highs. Highlighting the strain this is putting on some firms, data showed that over half of small businesses had job openings that they could not fill in May. A healthy jobs market generally boosts consumer confidence, but data actually show a small decline as consumers were somewhat less upbeat about the jobs market in May and also less optimistic about the near-term outlook despite a greater share expecting income growth. In housing, mortgage rates dipped slightly for a second week as investors continue to evaluate long-term economic prospects against a rising short-term interest rate environment. Despite the dip, rates remain much higher than last year, raising the stakes for today's homebuyers. Also, Case-Shiller data showed that home prices rose by a record high. This is notably backward-looking data covering home sales in January, February, and March, a time when mortgage rates were much lower than they are now, but rising rapidly. Looking ahead to our May Housing Trends report, we see that while home prices are still advancing to a new record, we're also seeing the beginnings of a real estate refresh in the form of a larger number of homes for sale. While this real estate refresh is welcome news in a still undersupplied market, it has yet to make a dent in median home price growth for three main reasons. 1, we're seeing more larger homes for sale. 2, despite the number of improvement, the number of homes for sale is much lower than pre-pandemic years. And 3, the typical seller outlook is quite high, likely shaped by the experiences of homeowners who have sold recently. As for sale listings grow, we expect competitiveness to ease, but we're just not seeing it yet. In fact, looking at the weekly data shows that median home list prices continue to accelerate, and time on market is nearly a week shorter this year compared to last. Diving into regional trends, some homeowners are getting the message and deciding to take advantage. The biggest gains in newly listed homes for sale were largely in the most competitive Sun Belt markets. You'll find the details in our housing data for download at Realtor.com/research, and follow us on Twitter for real-time updates.